Hello traders and welcome to another video review. Today is Friday, February 16th, 2024. Let's take a look at the Forex economic calendar for today. As you can see, I got medium and high impact events scheduled for release for today, and we already have something very interesting. Core retail sales and retail sales data from the UK had been published. As you can see, it's a mixed bag of data, but generally it looks better. Retail sales has improved from minus 2.4% to 0.7%, beating the expectations of minus 1.4%. Retail sales has improved from minus 3.3% to 3.4%. This is the yearly result. This is the quarterly result. And the core retail sales jumped, let's say, yearly result from minus 3.5 to 3.2%. Very good data from the UK. We will take a look at the British pound later on. ECB Schnabel will give a speech quarter to 10. Then we will have the basically New York session, because there isn't anything else for the London session. Building permits is the one of the key events for today, together with the producer price index. Both of them are very important here, and those events are scheduled for release at 2:30. Those events are scheduled for release together with housing starts and core PPI, of course, right? Foreign securities purchases and wholesale sales from Canada are scheduled for release at 2:30 as well. Then we have Michigan 1-year inflation and 5-year inflation expectations and consumer expectations, together with the consumer sentiment. All of this, the sentiment data are scheduled for release at 4 o'clock. And then, of course, we got the end of the week. So Atlanta GDP Fed numbers are scheduled for release 5:30, and then we got US Baker Hughes oil rig count and total rig count at 7 o'clock. At the end of the day, we got some speeches from the Bank of England MPC member Peel and then FOMC member Daly, but there isn't anything else except the CFTC speculative position release. So quite interesting day ahead of us, especially the New York session. Let's find out what's going on pound. So let's just switch for the pound straight on. The British pound didn't actually went higher much after this data were published. It's being rejected from the 1.26 level, as you can see here. So we are going to remove this short-term trend line. Very nice bounce, right? Typically corrective in nature. Let me just try to focus on the chart. There you go. So ABC to the upside. Now we are being rejected from the 1.26 zone. This is the supply zone. Momentum, well, kind of a neutral to negative. If we break below the 100 periods moving average at 1.2573, then the road towards the lows of the week located at this is the last week. Yes, this is the last week. So the lows of the week are still 1.2534, and the road towards these levels are open. So let me just place my line here, so I know this is the low of the week. There you go, and it will be green because it is a technical support. Still technical support. There might be not too much volatility here around this area because of it's end of the week. Data were published. Data didn't spark too much volatility whatsoever, so we shouldn't be that much concerned about the zone here. We need a trigger to the downside or to the upside in order to continue with the more substantial movements. Now, because of the Canadian data, let's switch to the US dollar, to the Canadian dollar. What do we see here on a 4-hour chart? From this low here, which is the main technical support, we can see very nice and steady improvement of the uptrend, and the price from 1.31 to even 1.36, almost 1.36. So let me just place some lines here. So we got the main technical support. We got the swing high, and right now, because it's made like a shooting star, I will show you that in a minute, there is a technical resistance. And to be honest with you guys, it looks like what markets wants to do ahead of 1.35 is very well known things that the market does. Let me just get rid of the magnet. There you go. What the market does is we got the breakout. Yeah, we got something like, let's say this. We got the breakout, and then we go down. Again, the same situation here. The same scheme is being utilized here. We got the trend line for something like this, for example. Then we have a breakout, and up we go. Again, the same pattern of the behavior, of course, is being, let's say, visible here. Breakout, we're going down, you're going down, breakout, we're going down, we're going down, breakout. Now, what should happen here? What should happen here if we follow this rule is, of course, let's say, let's do it like that. We got the very steepy movement to the downside, and then possibly the breakout will occur. Where is the next technical support? The next technical support is 1.35, 33.57. This is very important technical support, so please keep an eye on it. Maybe not even today, but in general, in the midterm, for our time frame chart, of course. The other one is 1.3412. That's the low here, and I'm just wondering whether this will be a nice channel, but it doesn't actually. Looks like one, and the situation here is that's even more than 61%. So now it's just, I think this display of this trend line is the best one you can get momentum wise to catch these movements, sometimes to the upside, sometimes to the downside. It's up to you, basically. All right. So what else we should take a look at? US dollar to the Japanese yen. Why? Because it is moving around our trend line. It's broken below the trend line as expected, because there was a technical support here, 149.84, let's say. Now we are testing this trend line from below, and we are now already below the 100 periods moving average. Nevertheless, it's like a congestion zone, so plenty of things can happen. Very nice movement from the extremely overbought market conditions on a 4-hour chart towards the 50 points RSI line, which is the neutral line, and now a bounce. Very, very nice. Good work, bulls. This means the market still wants to go higher. Let me just now exchange this line for more convenient big red line after this harami pattern on the top was done, 150.89. Well, we still wait for the movement to the downside, as you can see, to the upside, sorry, minus 84 was the last correction. Let me just take a look at the price range. What is the situation here? Minus 89, so almost one-to-one correction was done here. Beautiful move, beautiful situation here for all of the traders. So let me just move this line a little bit here. There you go, it should be here, and we should wait for the another movement to the upside on the USD to Japanese yen. Yesterday's crude oil data, they sparked another movement to the upside. We got V-shape reversal. You can see it here. We got this short-term black trend line. There was a bearish engulfing. There was a movement to the downside ahead of the swing high from the end of the January 2024, 79.25. Movement to the downside towards 75. That was 75.77. Very nice V-shaped reversal, consolidation after the test of the short-term trend line, and now all we need is a break to the upside. So let me just remove this line because we got very nice line just here. So now we got the zone, and to be honest with you, I would add one more last line, because it looks like the last one wants to be place it at 78.06. So quite strong supply zone. It doesn't actually looks like the market is ready for a breakout to the upside, but judging by the V-shaped reversal here, both in price and if momentum, we went down from the extremely overbought market conditions. Very nice rebound, and now we should expect the market on oil to break higher if this momentum is sustained. So this level here is the one that we are looking at as the last result for the bears, because it's the last one in line for the resistance, basically, right? So we should see another movement to the upside in crude oil very, very soon. Please notice the fact today's the Baker Hughes crude oil count, so they might trigger some volatility on crude oil markets. That's everything from me for today. Thank you very much for watching this analysis. I hope I see you guys next week. Take care and bye bye.